Guys, welcome. How are you doing? We're back on our asset review series, and today we have Taranga here, who's our head of research, and David Lighton from Lithium Finance. We were hoping to revamp this series earlier. We're recording one episode that we did for that. So a quick rundown for everyone that hasn't watched the series yet. We're reviewing the reports generated by the Decentralized Comprehensive Objective Research Engine, DCOR, which is crowdsourced information about projects that are up and coming in the crypto sphere. And well, today we have David to talk about the report that we've generated for his company, Lithium. So would you just like to give us a quick rundown, and also for everyone that hasn't got acquainted with what Lithium is, about what it is, and of course, what are illiquid assets, since that's going to be a big part of our conversation?
Sure, my pleasure. And Carlos and Taranga, thank you so much for having me here. It's really great to discuss, in depth with the community, and we appreciate what you guys are doing with your research products. I think that's pretty cool. So,
thank you.
Lithium is something I hope simple enough to describe, but what we're creating is the world's first decentralized data oracle for private assets. So in other words, we're offering first-party data on valuations of private assets. What are private assets? In our view, it could be anything from crypto projects or NFTs to pre-IPO and private equity stocks to real estate and collectibles, right? So everything sort of running the gamut of illiquid assets, from crypto all the way into more traditional asset classes. The distinction is that we're not giving valuations of assets or products that are publicly listed, because they would be much more liquid and therefore wouldn't have the same issues with information asymmetry that the products and assets that we cover do. So I'll give you an example. We have a friend that likes to trade Bored Apes. Bored Apes are very, very in fashion right now. And I think that he bought an ape for about 30 ETH, and several days later sold it at 60 ETH and said, "Oh, that's terrific, right? I just doubled my money in a week. It's very exciting. This is so cool, right? I'm just riding the wave of NFTs." So then he went to sell it, and he saw that it was resold just a few days later for 90 ETH.
Wow.
So what happened, right? I think that this is a very particular story, but when you're looking at assets that don't have good benchmarks, and especially in this new world we live in, where there's a lot of market manipulation, in particular in the crypto space, and wash trading and other things that we find nefarious, it's extremely, extremely valuable to have a trusted, decentralized entity that can bring pricing data, right, and allow to increase the liquidity of data and increase the liquidity of certain assets that people might like to trade, right? So how do we do this? We have a first-party data creation methodology. We use something called the DMI mechanism, which stands for Determinant-Based Mutual Information Mechanism. It's a methodology that was developed at Peking University. And essentially, it's a way to distill a consensus or a ground truth, if you like, from a finite number of people. So, for example, if Taranga comes to me and says, "Hey, man, I want to sell this ape. What do you think it's worth?" I'm going to go poll a community of experts who will give me answers on what the ape is worth. Our algorithm will sort all those answers, come up with a consensus, and feed it back to Taranga, right? And then he's going to go and say, "Well, I think this is what I can get for the ape. And now I feel much more confident about what would represent a good price or a bad price for my ape." Yeah. So I think, when you look at an asset that's sort of as out there and as cutting edge as NFTs, it's a very difficult problem, but it's au courant. I think when you look at the more traditional assets like private equity, pre-IPO stocks, you end up in a world where things are still opaque, but where you have some fundamentals that you can base your valuations on, right? So, that doesn't really account for how things trade on the public markets always, because lots of assets get bid up for no reason, right? Just because there's demand for no reason, because they're hyped. So again, I think what we're trying to do is to create benchmarks that are trusted to bring more liquidity and confidence into otherwise opaque markets. And I think it's really a force for good. And the overarching theme is that we believe more assets will come on chain if we have a really concrete way to price them, right? Because if you look globally at what's going on in DeFi at the moment, we're suffering from a shortage of liquidity because there's not enough real assets being traded on chain, right? And everyone wants that. But in a decentralized world, even though you don't have guarantors like financial institutions, you still need someone to come and say, hey, this is what the thing is worth. So you can go and you can trade it here. It'll be easier. So we build liquidity by attracting more buyers and sellers. We attract more buyers and sellers by increasing, the free flow of information. And that's what Lithium is really all about.
Another problem with liquidity is that it's just somehow all locked in different places, right? So like the networks are not too interoperable. And as you say, like the bridges that connect all of the money that's stuck in the different networks and in the different places and protocols and everything is just, they're non-existing or really clunky at best. So it does, what excites me about Lithium is that it really makes sense that if you're going to be putting assets on chain, and that's physical assets and as well every liquid asset, basically, you do need price feeds that are obtained in a different way that you would with, say, a chain link that just accounts for a different type of things. Before we start sharing the report here, I wanted to ask Taranga if you could just give us a quick rundown of how Lithium came into our radar.
Yeah, so we are always on the lookout for, disruptors. Our aim is to find the disruptors in the market. So we constantly keep an eye on the developments in the market. And so I came across Lithium as the news about, you coming to market and also the liquefy, incubating yourselves was very exciting. And then obviously it's the only concept that discussed about, bringing pricing into illiquid assets. So it's like one of a kind. So that got our interest. And so we ran the, research and to see what was really in it and to understand the technology and what you guys have done so far and what you're trying to achieve and the team, everything. So that's how it all came about.
All right, and I'm gonna start sharing the screen here to see the report so we can pick up our pace here. Of course, everything that you see in these reports is the result of Taranga and our researchers' work. The researchers are distributed around the world, and they compile their answers based on publicly available info. So this is always a good exercise, both in transparency and for the projects themselves. We always find that people do appreciate the fact that they get to have such a sort of a summary of everything that's put out from themselves into the webs. So we've already touched on what Lithium Finance is, and there is I would say that it would be helpful for people to hear a little bit more, David, about the way that the information is crowdsourced and how does it look in more practical terms. So would you like to do a quick rundown of that?
Sure, my pleasure. I think, let me pick up where I left off, and I think that will be helpful to the viewers. You mentioned Chainlink. Chainlink is absolutely, fabulous service and is powering a lot of different projects on chain. What distinguishes us from Chainlink is that they're basically an aggregator, right? They're a third-party data provider, whereas Lithium is a first-party data provider. We're creating the data set ourselves. So if you want to run a query about what the proper IPO price for Coinbase will be, for example, although that's already happened, you would come to the platform, and we would, within our nomenclature, we would call you a wisdom seeker. So you would come to the platform and you would say, hey, I'm going to stake a bounty here of about $500 or $600 because I want to know what would be a fair price to buy the Coinbase IPO, right? So you'll make the query, and it'll get pushed out to a community of wisdom nodes who are our respondents. And the wisdom nodes, I think, can be represented by basically anyone, but we're trying to do just a teeny bit of stratification here, even though we believe in equality and flow of information. Certain people have slightly more expertise with these things. So we're going to have a class of expert wisdom nodes, people who are from top financial institutions, investment companies, what have you. So these will be either institutions themselves who will have a representative or something like that that's going to enter data in, or they'll just be individuals who happen to work for well-respected places, respected professionals. We'll also have wisdom nodes from the community. So at the end of the day, anyone can answer questions, but your reputation will be predetermined somewhat by, our screening before you come on the platform, and then it'll continue to develop based on how good your answers are, right? So if you do a great job, you'll get a bump in reputation, right? And you might, for example, if you do a great job continuously, you might get promoted from being a community wisdom node to an expert wisdom node. And that's something that we're thinking pretty hard about as we continue to architect and refine the platform. So if we get 100 responses on what the Coinbase IPO should be priced at, each respondent will also stake some tokens, right? Each respondent will stake some tokens. The algorithm will filter all of the responses and come up with a consensus. The bounty, as well as the stake tokens, will get redistributed to the folks who gave the consensus answer, and they'll also enjoy some reputational benefits on the platform, right? So, I don't want to put it crudely, but this is a cool kind of fantasy football way of crowdsourcing valuations. And indeed, there's a lot of good empirical research behind the DMI mechanism and this basic principle that you don't need an infinite community of responders to understand what the consensus is. You can generate a wisdom of crowds kind of answer with as few as 100 people, so long as they are a kind of representative sample of what the market thinks, right?
And when you mentioned, of course, that you're very right, that it's not the same to be generating data sets than it is to be aggregating them as a third party. So I think it's interesting. By the way, Wisdom Nodes, great name. But I would think in an ideal future, and if we look at blockchain 50 years from now, 30 years from now, you would ideally have several lithiums in the world, right? And aggregators then filtering through those to compile all the data and provide even better precision. Or how do you see that evolving?
Well, I think, we anticipate what you're saying on some level, because we have quite a lot of debate and discussion internally about which sectors to focus on for our beta and for the platform more generally, right? So NFTs are a hot topic. There's already other companies in the market focused on valuations of NFTs. I'm not going to name any names, but I understand that's quite a difficult undertaking because there's no fundamentals to value, and you're seeing enormous volatility, not to mention the wash trading and manipulation, right? So that would make valuing NFTs a very specific skill, right? And then when you look at crypto projects, I think it's another very exciting example. I was talking to a fund manager. I was talking to two fund managers this week that told me, look, we're active in buying tokens. You can't expect to run a good fund in the crypto blockchain space without investing in tokens. However, because the market for tokens is not well supervised, there's a lot of them that get pumped, and we're always concerned that we own something that's been pumped and is overvalued. Similarly, there's a lot of projects that don't have great marketing and that are pre-product, which the market undervalues. And so, what the fund manager said is, we need experts that can help us value these crypto tokens after the IDO or exchange listing, so we get an idea for what to hold, what to sell, because we don't always trust the market, right? And going back to the wisdom of crowds example, if you look at publicly traded stocks, the market tells you one thing about what people who are actively trading the stock think. But that's not representative of what everyone thinks, right? Because there are people that may have intimate knowledge of a certain stock that are not actually trading in the market, and they may be represented in the sense that demand goes down, but they also may not, right? So let me try to answer your question more directly. I think that the methodology we have is holistic. It's sector agnostic. Is it one size fits all? I don't want to go that far, right? But it's the same basic principle of crowdsourcing truth or consensus. But I think in the future, you will see more specialization, because we've spoken internally at some length. It was like, hey guys, we can't just be a generic platform for private asset valuations, because the people, the wisdom nodes that have expertise in NFTs are not going to be the same people that have expertise in pre-IPO stocks. And so I think that the specialization is key. We hope that we're taking a big step forward in solving issues with information asymmetry, but I have no doubt there will be others who want to do this in the future. And I think if they are very specialized, that's not such a bad thing. Right. So,
no, not at all.
Yeah, absolutely. Absolutely. And I think I would just make one other comment and prediction that, there's no reason that our data can't end up on Chainlink. Right. So we have no problem with this. Like, right. We're an open source, decentralized platform. We want it to get distributed out into the market in as many ways as we can. So, we're open, and we hope to collaborate with whoever else wants to jump on the platform, basically. So no problem with other more specialized valuation methods.
And well, that's DeFi, right? That's composability. If you wanted your data to not be used by anyone else, you just wouldn't go the DeFi route, because by putting it on chain, you're making anyone able to use it. Before I let Saranga ask you something, I wanted to just touch base quickly on how would you then prevent collusion from wisdom nodes, particularly at the early stages, because as tends to happen with these DeFi protocols and with everything in finance, the less people there are involved, and at early stages, it's very difficult to have huge crowds coming in. The easier is for them to collude and to just run the system themselves.
Yeah, so I can say that the way the protocol is designed, we have multi-factor protections against collusion and manipulation. I would say that there are some sensors in the code itself that look for collusion and manipulation and can identify answers that are divergent from the consensus. It's very, very important that we get a pretty robust group of answers, however, because you don't want a situation where you have 100 wisdom nodes colluding and misleading the protocol because they are all investors in the asset that is being priced, right? It's a completely fair question. So we have that. I think the second and maybe more powerful line of defense is that we will slash tokens for people whom we deemed to be malicious actors on the platform. And so we will actually take away tokens that they've staked. So we think the incentives are basically aligned at a high level. We expect that we're going to have to beef up our security protocols, and it'll be a constant, undertaking like it is on any social media platform, right? This is a big deal. Manipulation, disinformation. We're very aware and we're focused. And I think the third is something I mentioned previously, which is that respondents will get a reputation score for each answer they bring to the platform. So there are a number of different lines of defense we have against manipulation and collusion on answers.
Mm-hmm. Cool. Tharanga, anything about the summary?
Yeah, I've just had one query on where David mentioned now, when you talked about where to focus, is there a requirement that you will have to have algo twisted into some of the sectors, whereas for let's say private equity, you will have to have one version of your algo. NFTs, it could be a twisted version to cater to that particular segment, or is that like a general algo that will be applicable to in all these cases?
Well, I think it's a good question. I mean, it goes back to the sort of like fundamentals versus the markets question. So with NFTs, you're talking about something that's inherently volatile, where the market often has like very little information.
Yeah.
Now, having said that, it's plausible that the way the protocol actually works, right? The guts, the software, algos, and the technology might want to work differently for NFTs, because we perceive that a wider range of answers is more appropriate for an asset class that is prone to volatility, right?
Mm-hmm.
That seems a reasonable point of view. However, at this time, we're still in the relatively early stages of development. We're reviewing our internal test net at the moment, which is super cool. It's exciting. We're all geeked out on it, running queries, answering each other's queries. It's pretty cool. So I think the sky's the limit for changes we can make to the code itself. But on the other hand, what's more important is having the very high quality respondents. So a lot of my time is spent trying to recruit wisdom nodes who will bring the quality of data and responses that we want to the platform. Pantera has agreed to do this. Hashed has agreed to do this. These are, our venture investors and some of the top funds in the space. So we're pretty excited to be collaborating with them, as partners as well as investors. But I think does that answer the question?
Yeah. I think it answered. Obviously, it's as you mentioned, it's totally different when it comes to different assets and how you could plug in all these metrics such that you get the correct answers via the mechanism. Yeah. So thanks for that.
I'm curious here, since your job is pretty similar to Tharanga's, because he's responsible for onboarding researchers to the Decor engine, and that's like our parallel to what wisdom nodes would be on the Decor system. I'm curious if you.
Well, we should collaborate. By the way, absolutely.
Definitely.
Let's take this offline. This is DeFi. Everybody collaborates with everybody. Love to do something more together, honestly. So, I mean, in some sense, Decor would be the ideal wisdom node, because what you've done here is to create something that's kind of like you've already crowdsourced it. So that's pretty cool. And, you're trying to give reliable data to the marketplace about projects in a marketplace where there's a lot of fraud, and even projects that are well positioned sometimes don't do well. So I think you guys bring a very valuable service to the market.
Well, one of our guests on this podcast was talking about how he was so frustrated to see that his token got manipulated and just used to play with by the same people that invested on it. So like their early stage investors, they were just dumping and pumping it to their convenience, and just commenting on how powerless he felt about it and how that got used to play with the community, and of course the community wasn't happy at all. So yeah, you're right that this is a space where these things happen a lot. What I was going to ask you is that if um, while you're getting wisdom notes to collaborate, and of course these are institutions, these are not individual researchers as we do.
No, it's both. It's both. We're getting individuals as well.
Okay, and do you see any pushback from institutions in the fact that they would need to get very involved with a technology that they don't necessarily know how to directly interact with?
No, I think that's a good question, and was in my train of thought earlier that we want to make it clear that the wisdom nodes are not sharing proprietary confidential data about deals they have done. Right. So I want to state that again. If Pantera comes and they're asked to give a valuation of a project that they're investors in, they're free to do that. They are. It will be anonymized and no one will know that it was Pantera that fed the answer that, SpaceX was worth X, right? I mean, they're not an investor in SpaceX anyway. But what we're really looking for is as a matter of fact, opinions about what various assets are worth. And that's a kind of a different proposition, right? So, as far as the technology itself, I mean, our UI is very simple. It's not exactly rocket science, right? But what we're looking for are opinions of people who have some expertise. They have the opportunity to earn tokens. I think the kind of people we'd be trying to solicit are probably, rather similar to the folks that you poll to get feedback on the projects that you're writing about.
And that, just for people to completely get this picture in their minds, when Pantera, for example, is evaluating something like, you said they didn't invest in SpaceX, so we can say SpaceX. Do they share the valuation on chain, off chain? Where do they interact with Lithium?
Yeah, the data goes on chain. That's correct.
Cool. All right. So we can move to the product and company description, as to not spend too much time in the executive summary. That's always the part that takes the most time, since we're doing the intros and all. In this part of the report, we're very much focused on, of course, explaining what your product is and a bit about the technology behind it. So you're built on determinant-based mutual information mechanism, which for some people might sound like a word salad, but it's an actual thing. And you're using the multi-party computation for the confidentiality of the data. So in 2 sentences, what does this mean for the average folk?
In 2 sentences, what does the DMI mechanism mean for the average what?
Folk.
Average folk. Yeah, I mean, again, it's actually quite simple, right? And my co-founder Steve is a fantastic guy, but anyone who's an engineer at heart is an engineer at heart, right? So they love science and all this. I would say that the DMI represent the way to establish consensus, like you would in an infinite pool of respondents, right? I mean, when we run elections, we're looking for consensus, yeah. When we, go to cross the street, we're looking for consensus too. So DMI is a way to distill consensus out of a finite number of responses. It's a way of finding out what the market thinks from people who are not all trading in a given asset, right? Because it brings us back to the previous example that the market knows much more than it tells you when it prices when it prices a publicly traded asset. When we go to set a price to trade stock in General Motors, the market will trade it at one thing. The fundamentals may point to another valuation, right? Based on discounted cash flows or whatever method you want to use. But if we were to take a holistic whole of the entire, global population, we would come out with a different view on what General Motors is worth, right? And that is really what we're trying to do. We're trying to take an abstracted, distilled view of what the market thinks for non-tradable assets.
I think this comes to, in finance, we used to call intrinsic value versus price. And you are clear that you're trying to establish a price, which is like collective market psyche, right? In the equity markets, the price is the collective psyche of the folks in the market, whereas you can have discounted cash flow valuation, which is totally different to the price.
But by the way, guys,
right.
sorry, quick interruption. Who's got their WhatsApp notifications on? Because those are ringing, and I think, I think I'm gonna be learning about that in the comments.
Let me close out of my WhatsApp. It's mine, so I apologize for that.
All right, okay. No problem. I don't mind.
So, did my video freeze? Let's see. Okay, cool. So, look, I mean, again, you're getting into great questions here, exciting, almost intellectual topics about what the difference between a price and an appraisal is. I think for the purposes of what we're doing now, certain assets we could offer a valuation, right? I think that what I would so when we look at assets that have fundamentals, we could probably offer a valuation, right? I think when you look at NFTs, we're really just offering a price. It's really would really just be a price. So I strongly agree with your point, and I think we have to sort of embrace the fact that this is all new and get comfortable with the ambiguity about whether we're offering prices or appraisals or valuations, and just be direct about that, because you can't get to where you want to go without confronting the ambiguity, right? So
yes.
totally agree.
And then, one of the main concerns that get raised in the report about the way the implementation of something like this and how it would roll out in the real world, it's the regulatory hurdles. So I always tend to think of these things as, of course, for Carlos and Tharanga in their basement running a DeFi protocol, it is quite simple to just do whatever, right? And try and go decentralized and try and just collaborate with the community. But of course, as you get more professional and as you get institutions in, the regulation is something that you need to have built into everything in order to not destroy everything that you've created before. So I'm just curious as to how the implementations of these kind of solutions roll out when there is not a clear regulatory framework at all.
So is the question more about the regulatory framework surrounding confidential information, or around DeFi and cryptocurrency?
I would think confidential information first, but also just in general collaboration through these kind of through these kind of mechanisms that haven't been used in the past.
Sure. Well, I mean, we don't perceive any real risk regarding confidential information. Like I said, we're asking our respondents to give opinions. So you're an expert. I bring you I bring you something to give an opinion on, and you're happy to give an opinion that doesn't represent, disclosure of confidential proprietary information. So that's the view we've taken. We don't trigger any of the gaming laws with what we're doing. We on that side of the house, frankly, we haven't been concerned about regulatory risks that we're taking. It's a non-issue. Now, I think as you look more closely at the crypto DeFi, universe, you mentioned Gary Gensler a few minutes ago. Obviously, there's enormous uncertainty and depending on the day, optimism or fear surrounding what not just the US government, but governments around the world are going to do to the crypto space to serve their own interests and consumer protection. I think, based on what we're doing, we are an extremely strong fit for the utility token definition, right? So we're not super concerned about some of the securities law risks that seem very germane to certain other projects, right? Everyone's familiar with the now infamous SEC enforcement against Ripple. But we don't believe that that's really our biggest risk. So, I mean, I think that these sorts of regulatory questions represent a constant for every DeFi project. And I would just add that projects that are more focused on issuing, for example, like synthetic securities, have many more questions to confront with regard to the securities laws than something like Lithium would, because we're not really offering a financial service. We're just a data provider. And in the broad landscape of crypto projects, we like to think that's one of the less provocative applications, from a legal perspective.
And Taranga, anything you may want to add to that?
Oh, not really. I think we had it, off the recording, we had a chat about regulatory aspects. That's what I think David mentioned. We were discussing what sorts of regulatory, concerns or the shadows might wake you up in the night, right? So that's the kind of discussion we had there. I think he's answered that.
Okay, cool. So then I would like to move to this to the final part of the product section, and here. And this is something that, of course, the crypto community really looks at. And I understand that centralization is not a binary thing, and by default, and decentralization isn't either. But if you just allow me to read here. Going directly to the important part after disclosing that. This is something I want to get back to, and if you want, answer this along with that. But you mentioned that the project is open source, and here in the report we have that it is not, because the GitHub link only hosts the project website. So I'd like to hear more about why would you perceive that it is open source. But first, since you have not disclosed any plans for decentralizing the platform's ownership, of course, everything is on smart contracts. So you would say that those are immutable and everyone can take advantage of them and they're on chain. So that should be open source enough from some perceptions. But of course, then the in-house team can change the protocol and the users would have to adapt to these kind of changes. And therefore, the protocol might seem to remain centralized in that sense. In general, what are your impressions or comments about this, David?
Well, I think, it's great to have the report out there for those who are interested in Lithium. I would add that we're still in a pre-product phase, and therefore, anything on the GitHub or that might be open sourced in the future, but just may not be yet because we're still deep in the development phase. And I think it's really as simple as that, guys. It's no great trick about whether we're a centralized project posing as a decentralized one. I think our mission is to be as decentralized as possible. We're considering turning the foundation into a DAO. And there will just be more to come on that particular topic.
That's great. I think, you froze there for a second. Good that you're restarting your video. There, you're back. All right, good. Taranga?
Yeah, I'm happy.
Okay. Let's follow with this. Well, success factors, and this is like what we identify as the main possible drivers for the success of Lithium. I'm just going to read them verbatim. It's an incubated, well-funded project. Is supported by a network of prominent investors. You have very good backers, of course. We mentioned that in the executive summary as well. You have a unique proposition, which is the DMI mechanism. I think those are, like we also mentioned, that's a one-of-a-kind project, and you're pretty much pioneering this space, which we see as something really valuable for the general DeFi environment in general. And well, you're operating in a niche market in a broader crowdsourced intelligent market. People are going to be seeing the scores that you got in all the different areas of the report in their screen here on the left. And I just want to point out, as I did last time we did one of these episodes, that even though the scores might seem low, that is because they're held to a very high standard, and the model is not linear. So even if you see someone that got a 50 or a 40 or something, that doesn't mean that we're considering them to be really low in their performance. Taranga, would you just like to touch on that quickly? Because I think that's always, that's gonna be something that we have to continue driving across every time we do one of these.
Yeah, so I think even inside, even in our own meetings, we discuss this. It is not that project A is 100, then project B is 50, and it means that project A is going to be a super project that's going to be the only project in the ecosystem. Obviously, all the projects have their own criticisms, I would say, challenges, and it's like even Bitcoin, when they were first building, nobody knew about this. Satoshi had all the control. So at the time, if you looked at the protocol, you would have not received, like a...
I would have received 100, no.
Yeah,
really,
so...
the guys
that's
in the
what
team
I'm
are
saying.
completely unknown. There's no social media virality.
No, yeah, and it's just Satoshi, and nobody knows who Satoshi is, right?
Yeah.
So yeah, that's the kind of, it all depends on where you start your project evaluation as well, right? And so we have seen that projects come into evaluation, and then later down the track, there was no, as David just said, there was no, MVP, let's say at the time of the research, and then you eventually go into MVP, mainnet launch and everything. Then you keep ranking higher and higher. That's how it works. And probably in 6 months' time, when we look at a project that we already looked at, it could be ranking higher because they have done really well in terms of delivering the project and in terms of the team and everything. And somebody who scored higher might be scoring lower because they didn't do well, because it's a very nascent industry as we speak, right?
And I would even say, I would even add to that, and I'm just mentioning all these because we were talking about the success factors. And of course, it's very important that we state that, of course, if we're reviewing these kind of projects, even if the rating is not super high in the end, it is because the model also has flaws, because things can change very quickly in crypto. You see that even, well, when we did the Internet Computer Report, we have to redo it 1 month after we issued it, because then something happened that crashed the valuation by 90%. And yeah, I also wanted to add that the model is not linear. Things are not as easy. You can take this as with a grain of salt. Going back to the success factors, or more, and moving on to the market conditions, I would want to ask you, how do you perceive the conditions that you're operating on, David? Because there's a case to be said that you're riding the DeFi wave, and there is also a case to be said that you're trying to bring something completely new to the ecosystem. So yeah, how do you perceive your marketing here?
Well, sorry, the the market conditions, right?
Yeah.
Yeah. I think it's a mixed bag where we are today, right? I mean, you have the Bitcoin is not near the all-time high price. Obviously, ETH is not near the all-time high price. We're in sort of turbulent waters on how regulators are going to deal with cryptocurrency. You know, one minute Gary Gensler says things that are very wishy-washy and sound kind of negative. Another minute, like yesterday, he'll say, well, the United States isn't going to behave like China. Public policy here moves in hand with lawmaking, and we're not going to shut down all cryptocurrencies, right? You know, that sounds like something kind of bullish based on previous statements he's made. So when I look at the market conditions now, I think it's okay. I wouldn't call it a bull market, but it's sort of average, right? And I would say the optimistic piece is that after the news of China's condemnation of Bitcoin, which was only, 10 days ago, the price quickly recovered back to 50,000. And many of the top analysts in the industry, including Dan Moorhead, who's co-founder of Pantera, shared a very, cool and explanatory diagram, just sort of saying, look, if you sell projects that the PRC wants to shut down, you usually end up losing money. And that goes for Bitcoin way back when, it goes for Twitter, it goes for Facebook, lots of different things. So I think, look, do I wish Bitcoin were at 70? No, I really don't. And then, to focus this and look a little more closely at our project in the context of the market, the token price, I think, reflects the market conditions as well as like your own community's expectations about the project. And so we wouldn't want to overheat anything, right? Why would we want to overheat? It's sort of the mission of the team is to build long-term value for our investors and for the stakeholders in the community. So we're all about a slow and steady ramp of activity and service delivery, and we believe that everything else will follow from that. And that's sort of our philosophy, right? Create value for stakeholders, and everything else will take care of itself.
How do you envision the market reacting to private assets just hitting DeFi?
Well, I think, there's enormous amount of financing going into various DeFi protocols that are dealing with private assets, right? Like private debt is a hot topic in DeFi. Mm-hmm. I've had numerous conversations with other entrepreneurs that are focused on private debt, issuance or reissuance, in the secondary market. I think it's a good time for this sort of thing, because we're really trying to push DeFi out of this phase where we were really successful in the summer of 2020, but there's a huge mountain to climb ahead of us if we're going to go mainstream and realize the vision of competing with financial institutions and really creating a peer-to-peer financial services industry like across the world, right? I mean, so I think the market's very positive on bringing private assets on chain. I think that remains the sort of North Star for us, and I see it all over the place. I think it's fabulous. There's nothing but optimism on that. But that's a very specific application that is a subset of what's going on in the broader crypto market, where you have speculators and day traders and a lot of crazy people that are just trying to make a quick buck and are not super focused on what each project actually does, right?
Shout out to the Shiba Inu community.
No,
I think you can move on. Yeah.
Okay, and yeah, because we do have to pick up our pace. The non-fungible, I mean, you could talk about the role NFTs play in the market all day, because it's interesting that this is sort of becoming one of the first mainstream applications of crypto, as far as it like with the normies, some might say. And yeah, it's just funny to see that of course, a lot of services and a lot of things that are going to be applicable for the broader financial crypto ecosystem are going to be born with NFTs. And I do see a lot of value in what Lithium can do with NFTs. Would you like to address the competition?
Yeah, absolutely. I thought this was a very nice diagram you guys made, sort of complementary, honestly. Oh, yeah, there you go. So look, I mean, there's a lot of oracles out there right now. You know, Pith is a new one. I think it's a space that is nowhere near mature, right? Because as you take away centralized guarantors from financial services that are, you know, have the trust of the government to do anti-money laundering, know your customer, sanctions enforcement, credit scoring, and all these other traditional like CFI analytical techniques, like you have a need for decentralized entities that are going to provide that same information. So we're kind of hot on the space itself, right? I think I've already explained that we're a first-party data provider. We aim to improve the liquidity of data across the landscape, and that makes us a bit different from Chainlink and the other oracles. But we're definitely proud of what they've accomplished. We don't feel a sense of, you know, stiff competition with them yet, or certainly not of like being adversaries. So yeah, we're a first-party data provider. We're exclusively focused on the private asset market, and we hope that the wisdom seekers that come to us will appreciate that a lot and will be loyal.
I'd echo that. And like I mentioned, the main advantage that we see from Lithium here is that you're the first movers in this space, and that you're pretty much pioneering it. I'm trying to pinpoint what's the most important here while reading at the same time, which is always hard. But okay, I think we can skip to the next part, the technology review. I really like these diagrams, by the way. The communication from your papers and from your documentation is a lot, makes it really easy to understand how everything works. Whereas I would find that that's a common problem that projects that are most focused on financial solutions have, that this is just not they often don't do a very good job like dumbing things down for people to understand them at a glance. Would you like to touch quickly on wisdom seekers, since that's something that we haven't covered too much on this chat?
Sure. I mean, wisdom seekers represent a probably equally diverse, group of stakeholders as the wisdom nodes, right? I mean, I have conversations with potential wisdom seekers basically every day. Everyone from venture capital funds who are investing in tokens, the example I gave earlier in our conversation, to DeFi protocols that are going to be selling, other people's debt on the secondary market and want pricing, to, the kind of person that would bring a piece of pottery to the Antiques Roadshow and ask for a price from an expert, right? So wisdom seekers can really be anyone. Whereas with wisdom nodes, we do need a core of expert wisdom nodes so that our answers don't get distorted by having too many uninformed responses. A lot of my time is spent going to have conversations with other people in industry to understand what their pain points are on private data. And I find that the deeper you get into these discussions, the more kind of nuanced, like sophisticated view you can get of how each stakeholder is really different. And we get good feedback on, like, for example, why we shouldn't try to price real estate assets, because other sort of like quant funds are so far ahead of us on that topic that it just doesn't really make sense. So we need to, carve out our own niche and so on. But, I think on the general question of wisdom seekers, first come, first serve, we want them all. we're open source, and it's similar to Wisdom Nodes. We think anybody should be able to do it, and the more the merrier on the platform for us to build up our network effects and the robustness of our data set.
Mm-hmm. Taranga?
Yeah, so one thing that I would like to understand from David's discussion, I think you just basically touched upon that. What's the kind of receptiveness and type of the biggest pain points, I would say, that these guys want, as a wisdom seeker, that be sorted out, that they don't get it from the other sources that they traditionally use. Is it just like, let's say, real estate, very particular area or something like that, or is it generally something else where there is no any information whatsoever? What's the biggest hurdle? I just want to be a seeker here because this is the biggest value addition to me.
So your question is, what is the biggest pain point of wisdom seekers? Look, I mean, I think that it's a diverse group, right? So we've made announcements about wisdom seekers on our platform for several months now, right? So if I pull up the Lithium Finance Medium blog, I can give you several examples that show that there isn't really a representative pain point for wisdom seekers, but that's all the more reason why we should, be decentralized and keep crowdsourcing, right? So, for example, Alameda Research is one of our investors. They are, of course, the private investment arm of FTX. It's affiliated with Sam Bankman-Fried. Alameda has suggested to us that they would come and make queries about private equity secondaries, right? So they have and this is a typical problem. Like, you go to buy something, it has a price on it from the past, it's getting resold. That may signal that someone wants to liquidate it, it may not. So the last valuation may not reflect what the performance has been up until today's sale in question, right? So I mean, it's hard to really put your finger on what unites all of the wisdom seekers in their pain, but it comes down to information asymmetries in the private markets and the basic fact that if you're in brokerage, you tend to trade on opacity in markets, right? Because you know something that someone else doesn't know, so people come to you. So there's a perversity in the way a lot of these markets work. So we try to take a high level view where we bring more transparency to the market works better, and I think that's sort of what unifies all the wisdom seekers that we're going to deal with and that we're already partnering with.
Yeah.
I'm speaking about nice diagrams. I also really like this one that explains how the uncorrelated answers get
Oh yeah, I love that one. That's one of my faves.
Get discarded because it's just I mean there's a beauty into being able to communicate these things simply. We won't touch a lot into the Ethereum network since there's already enough said about the Ethereum network everywhere. Onto the team, unless you want to get gossipy, I think we can skip it. The team is very good, we found. If only we were surprised by the lack of advisors that are publicly listed for the project. Sure.
Well, we've actually announced 2 advisors since then. So I think that may be something
that's a disclaimer that needs to be added there for sure.
Yeah, exactly. So the first is a terrific guy named Max Michaels, who's an extremely experienced investment banker, management consultant, and startup executive. He's another MIT geek, along with me and Steve. He's a graduate of the MIT Engineering School and the Sloan School. He has his own fund and recently was basically co-founder of a startup company called Stride Funding, specializing in income share agreements, which is a new underwriting model for student loan finance. Max has a particular passion for asset pricing problems and wrote a number of different papers while he was at McKinsey and I think even at MIT, collaborating with people like Stu Myers on the question of how to value private assets without sufficient information. So he's taken an interest in the topic. He's very passionate. We love getting his advice. He's a very smart guy. He's a lot of fun, based in Dallas full time. He brings a lot to the table, certainly with his network too, his worldview, right? The second is a guy named Guillaume Chatin, who's a super impressive career financial services executive that recently dipped his toes into crypto in the past 4 or 5 years. Guillaume is someone who I met while I was in the Techstars accelerator with my first company, SendFriend, which is still active and doing well. It's a blockchain-based cross-border payments business. But Guillaume is currently the head of Western Europe sales for Coinbase. So he deals with a lot of institutional clients of Coinbase, selling them custody and investment products. So, someone with a deep knowledge of the traditional capital market world, as well as the blockchain universe. He's also a former entrepreneur and former managing director at JP Morgan. I think he graduated from the Columbia Business School. So we've spent a lot of time with these guys. I think, in particular, we value, Max for his passion for valuing private assets and his deep strategic knowledge, and Guillaume for his intellect, his great industry knowledge and network and knowledge of how Coinbase works. So, these are good people to have. That will be appointing more advisors in the future, but for now, I think we're pretty well staffed.
Yeah, it's always really impressive when people have both the experience in the TradFi world and in the DeFi world, because that's a rare mix, and when you do get it in, that's pretty good. Any comments on these two? I mean, the researchers did find that the team lacked resources in these following areas. I know it acknowledged legal and compliance, and I know the engineers and in general, they're not people that you would want to list publicly on the website for various reasons. But
this is interesting. I mean, I think I don't know exactly when you did the research, right? So it's harder for me to give like a Hollywood answers on these kinds of things, right? Yeah. But I would just say that we have front end and back end engineers that are full-time members of the team already. I think that their profiles should be publicly available. We're working with some really excellent law firm. We don't have any in-house legal resources at this time, but that's fine. That's pretty typical for a startup company. And I would just add that a lot of the BD, as you can probably tell, is being done by yours truly, but that we're scaling up our marketing team. The reason that you don't see full-time marketing hires out in our digital presence at the moment is for a very simple reason, that the staff from Liquify Labs have been helping to run our marketing activities up until now. So there was no need to hire until the incubation process was finished. Now we're kind of taking the next steps, you could say.
Yeah, I do. It does show that you're working a lot on business development and that you're doing a fine job with it. Anything else to add there, Taranga?
No, I think, the idea here is that, if David's time is, really, it's valuable, right? So if he's got to spend more time on some of this marketing, like the low hanging stuff, I think it will be not useful from the project's overall strategic direction. So that was, I think, the basis of why they just pointed out this as well, because they would love to see David freed up more. So obviously, incubator was a good support. Yeah, I'm happy to hear that. Yeah,
And
I think
since
this
we're
will help researchers as well, because they know where the founders sit and how it all works out and evolves into the future.
okay, yeah, and since we're due to finish this within the next 10 minutes, I just skipped ahead right to the risk section, which I think has some very interesting ideas and even proposals for everyone wanting to check out the whole report. As these reports get obviously more in depth, it gets harder to cover them and do all the necessary explanations and everything, but you can find them in the description box for this video, as well as if you're listening to this on the audio platforms. We touched on regulatory uncertainties, and I think that's something that very generally applies to all of DeFi, because, well, uncertainty is a constant in this market. We'll talk about bootstrapping in a second, but I wanted to put some emphasis on this because at the time of this report, there was no dispute solving mechanism in place. Should there be a need for that? And we would considering that could be pretty interesting to integrate something that's based on decentralized governance, such as Kleros. But yeah, we just wanted to understand how you conceptualize this.
Well, we've had some good discussions about mediation and dispute resolution mechanisms. I think what I would say is that it's something we're working very hard on, and it's a constant topic of discussion. As you can imagine, it's important not to get ahead of your skis in this environment. Excuse me. So
oh, that was a long build up.
hopefully we can edit that one out. But I was just going to say, I think it's, as entrepreneurs, it's important not to get ahead of your skis, right? You never want to look more sophisticated or farther along than you are. You want to paint a picture right down the middle of what's going on. So, where we are in the build right now is a good place. We're proud of the progress we've made. I think adding additional features on dispute resolution is certainly something we're planning to do in the future. I've had a lot of discussions with Steve about it, but I would just add that some of the incentive design we've already done with token slashing and reputation scoring should help to reduce the incidence of disputes we need to resolve on the platform. But we're committed to doing what's needed to make Lithium run as smoothly as it deserves to.
Mm-hmm. And well, since we're reaching the end of this, Taranga, is there anything that you would want to have covered within this discussion that we didn't?
I think I've covered. I had noted down some of the important things, but I would like to get some thoughts on, David, your roadmap. I think December 2021 was the launch which we are waiting for. Are you on track to achieve this deadline, or? I think we saw some sneak peek into your platform on the Medium as well. So we are getting excited about these things.
Yeah, thank you so much. We've published a roadmap for the community and for general consumption. The public beta will come in Q4, and we'll have a mainnet launch sometime in Q1.
Q1, all right, okay.
And well, if people want to get the token, they can do so in Uniswap, and there is also
we're trading on a number of different exchanges at the moment: MXC, KuCoin, OKEX, Uniswap, of course. So yeah, the token, we did our IDO August 5th, and the token has been trading, with considerable interest for the last 2 months here.
Mm-hmm. That's great. And well, if people would want to get in touch with you, if people would like to learn more about Lithium, you've mentioned your blog, your website is lithium.finance, if I'm not mistaken. Is there a way to get in touch with you? Are you on Twitter or something?
Absolutely. I'm on Twitter. You can feel free to email me at david@lith.finance. I'm always happy to chat. And, we look forward to getting closer to the community of your readers and even your respondents. I think there's a lot we can do together. So we should take that conversation offline. Absolutely.
Definitely. And well, is there anything that you wish to have covered here that you didn't have the time for? Is there anything that you'd like to add to this review?
No, I appreciate the thoroughness and your interest, the sophistication of the work you guys have done. So we're really just grateful to get the time. And we didn't get to touch much on our investors, which I think is an important topic. But I would just say briefly that we're very fortunate to be supported by some of the top funds in the space. There's almost too many to name: Pantera, Hashed, Alameda Research, FBG, Kinetic Capital, Wabi Ventures, Block Dream Ventures, which is associated with OKEX. The list goes on. I think that one of the things that gives us a competitive advantage in what is on some level a capital markets play is that we have deep ties to a lot of the top players in the space that can really serve as our partners and help us develop the business with something that they know about, something they know intimately, right? So that's kind of a good fact we have in our favor. So I just would want to kind of wrap up the discussion by noting that.
Cool. And well, yeah, everyone feel free to just take this discussion as the first step to get learning more about Lithium and of course about Decor. There's a lot more information in the links in the description box. And well, if there is nothing else to add from us, I'd like to thank you both for taking the time. Thank you very much.
Thanks.
Thank you so much, guys. It's a pleasure. Really appreciate it.
Thanks for everyone watching. Bye-bye.
Bye-bye.